Hi and welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, head currency analyst. In this video, we're going to be taking a look at the price of gold, as we could expect the price of gold to potentially rally this week under certain circumstances. So we have a pretty big data release week for the US dollar. We've got flash manufacturing PMI that's happened today, and flash services PMI came in a little bit mixed. We've then got tomorrow the CB consumer confidence, and then most importantly, I feel we've got the FOMC statement, federal funds rate, and FOMC press conference. We also feel like the core PCE price index at the end of the week could be something as well to shake up the markets a little bit. Now, what are the situations that we could see? Well, if we take a look at the federal funds rate here, there are forecasts that we could see the Fed hike interest rates from 5.25% to 5.5%. The Fed watch tool via the CME shows that there is a 98% chance that we will see or probability that we will see a hike to 5.5%. So I think the market's pricing in that 5.5% move, and it could likely happen. Now, the thing that's going to be one to note is this the end of the tightening cycle now for the Federal Reserve at 5.5%? There have been talks in the past that we could see the rate as high as 6%, but is this going to be the end of the tightening cycle for now? And if it is, what effect will have that on the US dollar? So what I think will happen if the Fed do say, yep, this is it, we're done here, or we see a miss maybe on the core PCE price index here, we are forecasting for that to come in lower, then there's a potential here for the dollar to weaken quite substantially. And if it does, then there could be a point for gold to head a lot higher. Now, looking at it from a technical perspective, we can see that gold at the moment is just not doing much at the minute. We've had a bit of a pullback. We did come into sort of the $1979 area. We've now started to see price retrace that bullish move that we saw the week prior, and it's just waiting for a catalyst here. I think there's going to be a good sort of catalyst that's going to drive price to the upside here. Now, if the Fed obviously turn around and say something different, say maybe that, you know, they are going to continue towards 6%, maybe the dollar will start to get some investment again, it'll start to maybe strengthen, gold prices could trade lower. But one thing that I will watch for is the false breakdown move. I think if price starts to break lower on the initial announcement, if the Fed do talk about the fact that this is the end of the tightening cycle, then price may quickly shoot to the downside before then heading back higher. And I think that's the situation we may be faced with going in to Wednesday for gold. And I think that the sort of target area that we want to be looking for gold is back to those swing highs, back to that $2,050 area, perhaps even to the $2,075 area as well. Again, we want to see price probably trading above this 1979, 1980 high. This area has acted as resistance. We could look at lower time frames as well. Look for your lower time frame potential breaks there. But I think, really speaking, looking at this daily chart tells us everything we need to know. We're kind of still trapped within the body and high and low of the candlestick that formed on the 18th of July. That to me tells us that there's no real momentum either side at the minute, and we need that sort of fundamental catalyst, that fundamental driver that could drive price either way. Now, like I said, my bias really is probably to the long side here. It could be the fact that the Fed do say that this is the top of the tightening cycle. So let me know your thoughts down below. I'll speak to you in the next video.